What's going on, guys? Welcome back to another week. Welcome back to another Money Monday. My name's Xander with Fates for Trading Academy. Today, what we'll do is we're take a look at what happened last week, how that panned out, where we're sitting with the market right now, some key economic data that's coming out, and obviously touch on what's already been put out there. And then from there, kind of give an assumption as to where we assume the market's going to be headed. So taking a look at the chart here on the left, we can see that let me go ahead and grab a pen. We can see that we're currently sitting between this blue line, which is the EMA, and this line right here, which is the 180 200-day simple moving averages. So we're pretty much sitting at a very critical point. We're either going to break up to the upside above this EMA, or we're going to break down below the 180-day simple moving average and head down to these levels right here, which is this support. Obviously, right now it's really hard to say. The last 2 weeks, we had hotter than expected data come in, inflation data. CPI came in higher than expected, or hotter than expected. The PMI came in hotter than expected. The PCE report came in hotter than expected. And that pretty much led us to this drop that we saw right here coming down. Ever since the 13th, we saw the first leg down, and then the week before, this last week that just passed, we saw the second leg down. We actually talked about this last week that we were going to start heading down as soon as we broke through this EMA here on the daily chart. As soon as we broke below it, we were saying that we're probably going to head down to this support right here. And then if we do break this support, we're probably going to head down to this support. So obviously the first part we accomplished. We broke below the EMA and we came down to this first level of support. And I do want to say that this is a very, very crucial level of support. So it's going to be very difficult to break, as we can see from today's action. We ended up breaking or bouncing on this 180-day simple moving average. And now we're sitting between these two important levels. The reason this is a very important critical level right here that we need a break is because this 180-day, 200-day simple moving average has been a resistance all of last year. Every time we came up, we broke down below it, or we got rejected and broke down lower. Every time we came up, we broke down and came back down lower. And so now we finally broke up in this January move. We broke above it. And the question is, are we going to stay above it, or are we going to pull back and make lower lows? Two things I do want you guys to notice and note is that obviously inflation data is coming in hotter than expected. So this move from January, when we got that initial rate hike that was as expected and was 25 basis points, we're actually going to be seeing another one here in around this time period. And that is March 22nd and 23rd, I believe. And when that rate hike comes out, that's obviously going to have a very important impact on the market. And right now we have 25 and 50 on the table. And so depending on which way they go, if they go 50, I do anticipate the market's going to pull back at least to this level if we haven't by then already, and possibly lower. If we do stay with 25, then we might actually start seeing a push to the upside. Right now, though, we're at this critical level. And that's what we're going to be watching. And again, this is the daily chart, and we're watching this EMA for a break to the upside. And then we're going to be going long on the market, meaning we're going to be buying TQQQ. And if it breaks below, we're going to be buying SQQQ, which means that we're shorting the market. And so we're going to be making money as the market's coming down. And we're looking at QQQ, which is the NASDAQ right now. And that's kind of the technical breakdown on the daily chart. We went over some of the economic data that has been released. Obviously, it came in hotter than expected. Today, though, the reason we did see this bounce right here and we pushed up a little bit is because we had core durable good orders come in, and that was 0.7% and 0.1 was expected. So it was better news than expected, or it was higher than expected. And we also saw pending home sales come in, and that was also 8.1%. And 1% was expected. So those two came in better than expected, which is good for the short term in the market right now, as we obviously saw. We saw that bounce. But for the Fed, what that's telling the Fed is that obviously the money is still being spent faster than they want it to. They're trying to slow the economy down. And when they're seeing obviously 8.1% pending home sales and they were expecting 1%, it's kind of a red flag for them that, hey, you know, we haven't tightened enough, right? So that's kind of what we're seeing from today's action. Obviously, that was good for the market. Tomorrow, we don't have too much crazy information coming out. We have the goods trade balance, retail inventories, ex auto coming out. Those aren't too important. The one you guys should be paying attention to is CB consumer confidence. Obviously, we are expecting and forecasting 108.5. So we want to see how that comes in tomorrow. That's the biggest one for tomorrow. And then Wednesday, what we need to be paying attention to is the ISM manufacturing PMI and the crude oil inventories. The crude oil is going to be a little more important for those trading oil, but obviously it's still going to have an effect on the market. Thursday, initial jobless claims coming in, and then continuing jobless claims. Those two are important ones to pay attention to. Obviously, we have unit labor costs as well and non-farm productivity. Those are the ones that I'd be paying attention to on Thursday. And then Friday, we have the ISM non-manufacturing PMI coming in. And then we have obviously a lot of FOMC members speaking throughout the day. So something to pay attention to and kind of just have an ear on, you know, what's going around, what they're talking about, kind of what to expect at the end of March. So those are the key economic events for this week to pay attention to. And again, jumping back to the chart, the SPY is going to look very, very similar to what this looks like right now. And again, so the levels that we're watching here is 297 to the upside. If we're going to be going long, we want to see 297 break to the upside, and then we can go in long. And then that first level of resistance to the top is going to be 311, 312. If we break below this support level that we're at right now, which is the 290, 291 level, which is also where the 180-day and 200-day simple moving averages are. If we break below it, though, that first level that we're going to be watching to hit to the downside might be a very soft one right here at 285, which is the 50-day simple moving average. And then also the 281. So that 281 to 285 zone is going to be another level to the downside that you want to watch as potential support. And if we break below those two, so breaking this level, then we're probably going to be headed to 259, 260. So those are the levels on the daily chart. 4-hour chart doesn't look too much different. We take a look at the 4-hour chart. The setup is pretty much obviously the same. The technicals might be giving us a little bit of a different indication, but not really. So we are, again, testing this 180-day simple moving average, bounced at this support level, and we're just consolidating at this point. The RSI isn't very overbought, and it's not very oversold. So again, we're at that critical level where we can go either way. But those are the levels that you should pay attention to, and that way you have a plan of action once we break either to the upside or to the downside. And MACDs, obviously, we haven't seen a convergence to the downside. So from the 4-hour chart, it's reasonable to expect us to continue pushing higher. And if we look at the daily chart as well, that's also giving us that very same indication, right? We're at this support level. The RSI, we're starting to see this curl to the upside, and that usually tends to mean, so if we look at these examples right here, every time we curl, we push up to the upside. Right up here. We curled right here. We're anticipating a push to the upside, potentially this first level of resistance. Before curling right here, we were at a support, pushed up to the upside, curled right here and right here, pushed up to the upside. Obviously, we're oversold right here, which we came down, consolidated, and pushed up to the upside right here. And every time we do see this curl right here, we end up pushing up to the upside. So we're at that very same level right here. The MACD is starting to show the first sign of potential convergence, right? Meaning we're changing from red to orange, which indicates that every time we change, we're about to start seeing that shift. So notice we saw that change shifting to the upside. Saw that change right here. red to orange, shifted to the upside, started pushing up. And so that's exactly the first thing that we're seeing right here is we're seeing the change of color. We're out of support. RSI is looking good. We have plenty of room to go up on the RSI. Convergence is lining up. We're at a support level. That's lining up. We're pushing up to the upside. Again, remember last week when we talked about a break to the downside of this this EMA right here, it happened, right? So now we're talking about a potential support where we do push back up right here. And this might be the last leg up that we push up before we're selling off more. But that might not be the case. If we do break this resistance level, we might see another push up to the upside. So just some things to consider, things that we're paying attention to. Right now, what we're doing is we have a position going long. We're long bias because of the things that we just talked about. So if you guys are finding any value in what we just presented, make sure to smash that like button, subscribe to the channel if you're not already subscribed. And if you guys are on the team, you guys are going to be kept updated on the trading floor every day moving forward. Obviously, if we start breaking up, we're going to be going heavier on the TQQQ position, adding more size. That way we can capitalize even on this smallest move. That's what we're initially expecting is this push up to the upside right here to this resistance zone, which is sitting at approximately 315 or so. That resistance level is at 311, 315. So again, levels to the upside. First level is 312, 311. If we do see this bounce come up, if we break above it, the next level to the top is going to be 370, 369. That's the next level that we're really seeing resistance at. There's a small level right here from back in August, actually, from August of last year that we might find support at right here if we do break up to the upside. So let's go ahead and add this to the levels that we're watching. So 335 after that 311 level, and then to the top 370. To the downside, if we break it, first level is going to be 328 or 385, sorry. That's going to be where the 50 and the 100-day simple moving averages are. And if we break that, the next level down is going to be 359, 360. So again, if you guys found value in this video, make sure to smash that like button, subscribe, and I'll see you guys on next week's Stock Talk video.